The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Good morning and welcome to the Morning Bell for November 27th, 2024. I am Keith Harwood here for Yellow Tunnel and Tradespoon. Normal disclosures before we get started. Options involve substantial risk and are not suitable for all investors. Tradespoon and myself are not investment advisors, not registered with the SEC nor FINRA. If you do have questions about your personal financial situation, please consult with a registered financial advisor. The information in this presentation is for education and information purposes only and should not be considered trade advice. And finally, myself or the team at Tradespoon may have a financial interest in the securities presented and the trade ideas. So please keep that in mind as you evaluate these thought processes and concepts for your own personal trading and investment accounts. We're going into the holidays here. We got Thanksgiving tomorrow. Happy Thanksgiving to everybody. Thank you for joining this morning. I know we're getting ready for a lot of turkey myself. I hope you guys have some good plans for the Thanksgiving day off from the market and the half day on Friday. As we go into the normal seasonal behavior, the bulls tend to have the general control here at this time of year, seasonally, especially post-election. Drifting to new highs and then kind of grinding up into the end of the year tends to be the normal behavior. So given that they've got that control, there needs to be an input to shift the balance back to the bear's hands. And right now, that's difficult to see. I think the one thing that puts a little bit of pause for me is, and it can be viewed as either a bullish or a bearish input, the fact that semiconductors aren't participating in the most recent part of the rally. That could mean that semiconductors can fuel if investors start looking for value. The other thing that I'm more concerned with from the bullish side, and this would be beneficial to the bear, is if semiconductor position reduction starts causing other position reduction, i.e. we get a profit-taking and or risk-off behavior just to pull the market back down into the lows of the range. Window here, though, overall, small downside to support, or if we go into the upside mode, traditionally it's more of a grind. It's not like a spiking higher, mega buy everything kind of scenario at this time of year. Doesn't mean we're going to get something, not going to get something different this year. We may get a spike higher. We may get tail risk to the downside. If the fundamentals start to shift that direction, that can certainly change the market's response. But right now, the sort of norm seems to be a drift higher. The probability of success seems in favor of the bull. As a result, the return on capital is low, but the VIX is low. So with a low VIX, we are pricing in the low moves. So a lot of the trade now is about getting the direction right in order to capitalize on that move, not necessarily on the magnitude of the move, but more on defining the risk in case of a trade going the other direction and leveraging it still. Because we don't need, if I buy both the put and the call for the at-the-money options, i.e. the straddle, I need movement to profit. If I only buy the call, I need half as much movement. I just have to have it go in the right direction. So if we go up, I'm going to be better off if I'm long the call, obviously, but I'm not going to pay. If I'm not paying for the put, I don't have to offset that premium paid for the put. So that's how that return on capital gets managed. So following the technicals, looking for the investment flow and looking for the way the market is behaving is crucial. Like I said, as I've said a few times, we're not really seeing much trend changing. We're getting a little bit of chop. Bitcoin bouncing back today, so there was no real trend change there, just a profit-taking dip as we pressed against resistance at the big $100,000 level. Overall, the market looks like everything is going to be pretty quiet today in particular. There are individual stocks that are moving. The earnings names last night actually had a lot of bigger movers, which is interesting to see. And we'll review some of those charts now after that's done, see how the market digests it today. Friday could be a low liquidity day for the market. So unless I have to do something, I tend to prefer not to do anything unless somebody else in the market has to do something and I want to do something as a result of it. So for example, if the market felt the need to liquidate a position on Friday due to risk parameters, that may create a buying opportunity. If the market liquidity is lower, the price action can actually be higher. So we get a very almost like trimodal scenario for the distribution, where rather than having a normal distribution where we have a large likelihood of stuff trading within the 1 standard deviation range, we start to see these possibilities of a large tail risk or nothing. It's a little less likely to get those mid-sized moves, because the mid-sized moves aren't really necessarily justified if nobody has to behave or nobody has to act. If somebody has to act, they can move it a lot more if the the market is not providing the liquidity needed. If somebody had to sell millions of shares of some particular stock and they have to do it on Friday, that can move the market. All right. Long and short the market at the same time with a certain bias is certainly something that seems to be working right now. Financials continue firm. Semiconductors continue weak. You just have to note that can quickly reverse. So if we start seeing tech buying, particularly in semiconductors, it may actually lead to financial selling instead of buying everything. It's a lot about right now just trying to figure out from the marketplace where their give and take is, what they're willing to sell in order to extend their positioning. All right, so if they've got no cash, and we like to keep cash, of course, on the sidelines as much as we can, but if there's not a lot of cash to go into the market, then we can't go into buy everything mode. If there is cash to go into the market, then that can happen. So with all that, why don't we go through a couple of the just bigger economic indicators on the market. This stuff we've talked about a lot. If there's anything in particular that people want to discuss, please throw out stocks, questions, etc. in the question box. Good morning, Fred. And we can discuss anything you guys got going for this morning. I'm not great with recipes though. So if you guys are looking for like a recipe for green bean casserole, I'll just refer you to Google. But no, on a serious note, let's get into the markets. So we got the 10-year yield drifting down a little bit further. I've said before, and I still think this is the case, not going above 4.5 was a good thing. Drifting in this range is a good thing. Getting below 415, I think, starts to put a little bit of concern for the market that we have a different economic situation than we were originally planning for. So if we get the 10-year yield back down a little bit more, that may shift the rotation for the market again. In this area, I believe we should be okay. I don't think there's major cause for sector rotation, position shifting, allocation changes. But this 415 level, the low on the 17th of July was 414. So right in that range is going to be, I think, an important level to reconsider. It was the low on July 17th. It was an initial slight spot of resistance here on October 10th. We pushed through it without much difficulty. But that's the only level I really see before 4% that, the post-election lows were breached now. The November 8th low is 426, right now 425. So very lightly. But if interest rates continue to fall, people are going to start looking for what's the reason, what's the cause, is there an economic issue? And if there is an economic issue that is identified, that could be a risk-off scenario or a rotation scenario. But as it currently stands, I think we're probably in the comfort zone. VIX 14%, right around the lows after the election. I do expect to see this drift a little bit lower here. Remember, this is for projected volatility for the next 30 days. That's going to include Christmas. Add a few more days here into the beginning of next week. It's also going to include New Year's. We generally see some slowness though from Thanksgiving to Christmas, and that's being priced into the market. But I would say as long as we stay near the highs, and if tech starts to catch up a little bit without any liquidation anywhere else, I wouldn't be surprised to see the VIX push down into the 12s. Initially was thinking maybe 13 could be the lowest. Maybe we can get down to like 12.5%. So options can get a little bit cheaper. Realized volatility can certainly underperform those low numbers and often does. We often see the VIX find a floor that is higher than the realized volatility. And that goes back to that need and necessity to have the direction right in order to pay off those long options type strategies. And then with skew, I noted this yesterday near the close, but I want to reiterate it here for those who couldn't make it on the close. The skew is starting to come down. which means that people are not selling put spreads necessarily on this. It's a little bit of selling of everything. So the SKU index as well, the SKEW index that's published by the CBOE, is showing calls at an extreme low relative to initially. What we often see when the implied volatility starts to fall is that people sell verticals first, i.e. push down the at-the-money options, but keep the teenies, the risk protection options, a little bit more expensive because you're selling the at-the-money and buying the out-of-the-money option. Then as the market continues to see sellers, people basically just start selling those out-of-the-money puts, those out-of-the-money calls, and the straddles. They kind of sell a little bit of everything. The protection gets dollar cheap, but it needs to get a little bit more dollar cheap effectively because the expected ranges are getting tighter and tighter. All right, so as long as that continues to happen, it shows that confidence from the market that we're not going to break out of a tight range that ultimately could be its downfall. If the SKU gets down too low, down towards 50 or something like that, then that could be an indication that the market doesn't have protection to the downside. And when we get down to that range, it doesn't mean it's an imminent break. It just means that we have to understand the positioning is if we do start to see some risk off behavior. So right now, via credit spreads, I think that they're trying to rotate a little bit more to collect a little more premium and not bothering with the protection side of the game. That could create a little bit of concern, as I mentioned, but as it currently stands, it seems like overall the market just ready for the boringness that we normally see at this time of year. I'll come back to HPE. I was looking at that after HPQ earnings this morning, last evening, but SPY is sitting right near the highs. This kind of fits with everything that I've already kind of outlined. We've got the market near the highs. The pullback, if it happens, support in this 585 range. That was the high pre-election. That was the low of this most recent dip. We may see some support here at 590, just a little bit higher, but 585 to 590 should be a good support level. Again, not a liquidation type scenario because we've got a lot of support levels below the market between 590 and 585, down to 575 here, the September high, down to 565, the August high. Basically every $5 to $10 in the SPY ETF has another level of support. If we start seeing news that changes that, and it's not going to necessarily be earnings, it's going to have to be a bigger economic input, that's what I think could start to create some real liquidation. But right now, I don't see a driver of that liquidation. It's just always in the back of my mind of what can potentially change the market behavior. If I go over to tech, though, tech is weaker today, down about 0.5% to start the day. Some of the earnings from last night, Autodesk, CRWD, HPQ, a little more downside maneuvers, and tech focused, and I think that's weighing a little bit on tech again. Didn't push the new highs. 515 was that level. So still lagging the broad market move, holding down a little bit. Yesterday's low, we are a little bit below yesterday's low right now. No major concerns until we get below 500 for me. Should be some support at 500 and further at 495 and then more maybe at 490. So every few bucks, it seems like we've got a point that we've had some trading volume, should have some support, should have some potential stop level prices, levels priced into the market. So I got to figure out what could cause a little more liquidation. And I think SMH is the biggest concern for me. We're testing near these lows that don't have a lot of support below them. So 237 type level here from November 18th low. Below that, I don't really see much support down until about 215. So that's another 10%. If we do see a semiconductors, maybe that triggers a little bit more selling in tech. And now if that's paired with buying of small caps, that's okay. That's the market rotation. If people stop buying financials, stop buying small caps while they're selling their tech, means they're first raising cash before they start looking to allocate again. It's normal market behavior, but it is something to be aware of and to watch for. If we start seeing market liquidation, because the first action is usually to reduce risk before allocating new risk, that could be setting up our next real buying opportunity. Small caps up 1% today. So it's that rotation element that I mentioned. Tech down, small caps up, people continuing to shift their portfolios. I think that a lot of people got very heavily focused on tech because tech was working, and then it's a self-fulfilling prophecy. It's working, so we do it, which makes it work, so we do it more, which makes it work more, so we keep doing it. Underweighted. The market was very underweight small caps, domestic names, very heavily invested in those big tech names. And if the current political regime, or I guess the 2025 through, the 4-year regime is going to be much more focused on domestic stocks, then that rotation needs to continue. And it doesn't happen in a day, doesn't happen in a week. We've now had 3 weeks of some of that behavior with less buying in the financials and the small caps during this November fallback. Sorry, it was small caps that were not being bought. Financials never really had too big of a pullback. But now it seems like the market's back to saying, okay, I'm ready to continue to buy financials and ready to continue to buy small caps and keep moving this market that natural direction, drifting higher. And speaking of financials, up a little bit more today, new high, just grinding out those gains, 0.5%, maybe 1%. The implied volatility is really close to the lows. 13% is ultimately kind of the low level that we've seen over the last 6 months in XLF. We're very close to that level, but we are underperforming it. So the blue line is the realized volatility over the last 20 days. If I add in the last 10 days, so you can see this is higher because it incorporates that November 6th spike. This no longer includes November 6th. And so you can see as we look towards the last 10 trading days, the last 2 weeks, the realized movement in XLF is closer to 10% annualized, or what is that, like 0.6% daily? So about 30 cents, 35 cents a day in XLF. If I go over to SPY, it's around 9% realized, in spite of the fact that these levels are near lows, we're performing even less. And heading up to the election, the realized volatility was down around 5, 6, 7%. I guess 6 to 8%. So when the VIX is low, because of lack of movement, it means that the lack of movement is usually even less. I don't want to take off the 10-day though. I don't like HV20 gives me the 4-week picture, so it gives me a full month of realized volatility versus the 10 days only the last 2 weeks. But yeah, overall market seems fairly healthy, seems okay. And my concern is if tech selling can start to liquidate something else. I do have it on here. FXI, I wanted to note that that's actually one of the best performers to start the day in terms of the realized move relative to normal standard deviation. So you can see here, FXI up 80 cents, 2.7%. Normal expected daily move is about 1.5%. So we are well over a standard deviation in movement now. A nice bounce back for China. That was another sector that looked particularly weak just yesterday. Looked like it could start to get some liquidation. But it turns out some of the value investors and people thinking about the economic policies in place are comfortable with China and getting back in a little bit here, and maybe speculating that tariffs won't have quite as negative of an impact as is currently being discussed. Do I think China is going to get bullish and push to the prior highs from October 7th? No. We're going to have some resistance here, particularly in the 31.25 to 32.5 range. So about 3% higher. I think that really kicks in. We're at kind of a consolidation area from post-election trade here from November, 12th through 21st. So basically a week or two ago. It's okay to see that for the market, because it means that there's not that one is not the liquidating sector. So we're not liquidating China. Okay, that's one red flag that now creates a little bit of distance for the market sellers. Semiconductors really seem to be the biggest potential at-risk sector right now, or subsector. IWM. Is this something you added today, John? Is that what you're talking about here? The 241 put added today? Not that one. 155. Number. Oh, Tuesday. Okay, gotcha. So you had a add on. Sorry, you added on like a Monday and closed it out on Tuesday, or just traded it in same day. Okay, gotcha. That's it. I mean, that's a good one for you. I'm happy to see that for you. You closed today. Yeah, nice. So a very little movement here in IWM overall, or sorry, in the market overall. IWM is actually selling off after the initial start of the day buyer. You can see here on the like 5-minute chart. Yeah, let's go down to 1 day. So you can really, you can barely see it because I'm on 5 minutes. So we started off a little bit strong and then kind of petered out. I think by the afternoon, we're going to see a lot of just sideways action in this market. We may drift around a little bit, but I got to imagine most people are getting ready for their holiday tomorrow and the half day on Friday. So not necessarily looking at a ton of active trading for the next couple of trading days. So it's about, for me, like looking for that market drift. Bitcoin is firm today. I should pull up the BTC chart real quick. So Bitcoin's not going into that full liquidation mode here. Nice bounce back. I'd like to see it above yesterday's high. So back above 95 would give a lot more confidence to the Bitcoin bull that this was just some profit taking and people feeling like they might have missed out on being able to sell at $100,000 a coin. That short-term trading philosophy creates that little pullback, and then we can retest that resistance and see if we can push through the next time. It may take 2 or 3 or 4 attempts, but ultimately, I do personally expect to see Bitcoin push through the dollar number just because it's been such a big talked about number. That's a big target for people. And getting there and finding no resistance could cause a spike. But we've already found some resistance there once, so I expect to see at least some resistance there again. IBIT. That's not normally. Yeah, so another BITO, IBIT. This one holds Bitcoin, right? So, or does it hold the futures? I guess it doesn't matter either way. If it's a Bitcoin price comparative like BITO or GBTC, for those looking for the options, BITO is good for options. I don't know if IBIT has options. IBIT does have options. Oh yeah, so that's the other one that's right there with the options. GBTC now has options, but they're not very liquid. You can see the markets are like $2 wide in some of the cases, 80 cents wide in some of these other cases. We got one that's 20 cents wide. That's more of an anomaly than track the price better, but BITO and IBIT are going to give a little bit more liquidity. BITO seems to be the biggest right now. That may shift over time. If GBTC can pick up some volume and tighten up the markets, that's going to be more exciting to people, in my opinion. But, the Bitcoin related names, the Coinbase, MSTR bouncing back a little bit. That one was looking potentially most at risk given the elevator up. Started to look like it was taking the elevator down, but Bitcoin bouncing back does help make sure that there is some support here. Didn't actually find much support at that 380 level. We held it for about 3 days. Yesterday pushed through with the further downside in Bitcoin. Now that we're bouncing back, it seems more likely that we're finding is if Bitcoin is weak on Friday for some reason, how low will MSTR go on an illiquid day? 320 seems like it should be a very strong support point. I don't know. Before I was looking like a 370, 380 call spread, and that still looks okay, but man, it looks a lot more dangerous now than it did, when we were at the highs. Is a 310, 320. Now there's not much premium in a 310, 320. So Right now, I think that this is a stock that I tend to try to stay away from with the premium so high. Once it gets back down towards like 135%, it starts to predict a little bit more normal behavior, much like what we saw in China back in October with the whole Chinese market. Every stock had explosive volatility as it went up the elevator. Then as it calmed back down, implied volatility started falling back to the norms. Marathon, I tend to like. Riot, I tend to like when Bitcoin is strong. I'm going to probably focus my efforts on Riot next week. So if Bitcoin can push through 100,000 and Riot continues to underperform a little bit, that's actually going to be a better potential entry point for me, I think, since it has been underperforming a little bit, but has that tendency to try to play catch up when Bitcoin is firm. So right now it's still in the laggard mode. If I was to try to get in early, I would go out to January, look at like some, 13, 23 call spreads or something like that, just because, how much premium in these 23 calls relative to the at the monies. You get this skew because the implied volatility does rise when this goes up the elevator. So it makes sense to have that premium in there, but I can also take advantage of that and say, if I can give a price target of $23, I'd certainly be looking to take some profits by that point, a wide call spread and sell a little bit of premium above the market, selling these for say 55 cents versus buying these for $1.55 roughly. So a little bit over $1 right now for something that could be worth as much as $10 if we spike and hold. The concern would be a spike and then fade. But even if it spikes to 20, 21, 22, and then hangs in that range, this call spread should go towards $5, and it helps me reduce my initial cash outlay. So I do tend to like the call spread philosophy because of the big call skew, but I also know that I'm capping my profits there. All right, so just kind of keeping that in mind with these kind of names. What else is moving this morning? It's mostly China. Oh, and retail bouncing back a little bit here. There we go. So retail had some good earnings and started pushing through. Santa Claus rally does tend to favor retail stocks. I do like the way that this is set up today. Retail names can be, I think, a good place to feel a bit of safety going into the end of the year. I know like Ross Stores looked particularly attractive as it breaks out now above the post-earnings day high. So we had the earnings gap up to 155 and change, almost fully negated that, and then just found buyers. And basically the market said the sell-off was wrong. We're ready to keep pushing higher. We're now testing effectively the highs outside of this one earnings on August, this post-earnings move on August 23rd. And, I wouldn't be surprised to see this get another $10 of appreciation into the end of the year, push towards 165 range. That one could be attractive. Gap, another one with good earnings and setting up a bull flag right now. So with the pullback, I'm waiting for that buying opportunity. Maybe it's Friday, maybe it's Monday. All I need is a higher high and a higher low than the prior trading day. If it continues to drift down, I will never end up getting in. But if it finds that floor and that value buyer that says the earnings were right and I'm ready to get in, that's when I want to be part of that trade. Macy's delayed their earnings, so they're coming out December 11th before market open. So we got about 2 weeks now on Macy's. It can screw with the market a little bit as we don't get the movement that was expected on earnings. Now we've just delayed the inevitable earnings move. That means that a lot of times people expect that they're not going to be good, but the market's not pricing that in right now, that earnings will be poor after the delay. So we got to keep watching that. TJX, yes. Thank you, Fred. TJ Maxx has been a rock star. I did go to Home Goods over the weekend just to see if there was anything I wanted there. Looked at the line and walked out. So I was one of the people that did not participate in TJ Maxx's bullish scenario as a result of just seeing the long lines, but that's also potentially indicative of the demand that you've got at Home Goods, TJ Maxx. So TJX owns TJ Maxx, Home Goods, and a bunch of other, let's see if they have the list. Home Goods, TJ Maxx, those are the two big ones. And then they had like 3 or 4 others that I can't remember off the top of my head. But generally speaking, it seems like there is some good performance out of TJ Maxx. Target, I'd rather stay away from. A ton of Black Friday sales that I've noticed in Target, and I wonder if they're trying to make up for some of their prior underperformance by getting some activity from the sales on, Legos and things that I haven't traditionally seen on sale. Lego seems to be changing their model from more like the Apple, we never go on sale, to now we're going to go on sale to try to increase some sales. We'll see if that proves beneficial for Lego and Target. For now, with the really terrible earnings, I think it's going to be hard for the market to chase into it. If it's high, then you might start to make an argument for closing the gap, moving towards 145, 150, maybe even ultimately up to 155. But as it stands right now, the negativity surrounding. Thank you for the reminder on Kohl's. So similar sort of situation with the poor earnings yesterday, but bouncing back today. It's not catastrophic earnings the way that Target was in terms of the price action. We did have a bad day, but we didn't have the TGT level 22% drop that never really seems to happen. Normally a 10% move. Kohl's was, I suppose it was so not great by any means, but part of that was driven by the fact that we had such a run up for 2 days prior to earnings. So if I go off of the low of the 21st, which was 16 and a quarter-ish, we're really only down about 3%, not down 17%. All right, so this one looks like it's ready to just fill up this gap a little bit better. I don't want to necessarily bet on that. That's not a hugely leveraged potential trade. I think the stronger retailers like Ross a lot better to me. What other retailers did I have on my list from recently? We had Best Buy. So they had their earnings slightly weak, but held support pretty well. So this looks a little bit better than Kohl's in that it didn't like push to a new low, or Target where it pushed down low, but not great. Kind of just an okay one. And then we had, Ross Stores and Gap were the other ones. And Abercrombie and Fitch. And Abercrombie and Fitch, I think Gap looks better on the chart. So maybe not got, for whatever reason, they always just seem to be very strong. They must have very good margins on the products that they do sell. So I'll stick with the R's, Restoration Hardware or Ross Stores. Ross Stores being probably my preference, even though I couldn't tell you the last time I shopped at Ross Stores. But clearly people are doing it because this actually GameStop I need to look at again. This is interesting to watch GameStop's recovery here. This is a much more normal type bull move for GameStop than what we've seen in the past. Traditionally, by the time we've gotten to this point, in the 27s, we start to spike. You get some aggressive call buying coming out there. We do have some earnings on December 10th. That may just stop this, and maybe that's what's preventing it from doing the spike and fade. Fool me once, shame on you. Fool me twice, shame on me. Fool me 3 times, I guess more shame everywhere. The company hasn't completely rejuvenated itself yet, but it could be interesting, the trigger to spike and not fade. We'll see. I'll do some more earnings work on this heading into the week of earnings. The June 7th earnings were particularly bad for it, down 40%. Over the last 3 years. Recently the earnings have been underperforming the market. We've kind of run up in preparation for those earnings and then fallen off. So we'll see if the same happens now. But right now it says the market's not really pricing in anything for earnings. It seems like the market's pricing in equal probability of movement before earnings as it would for earnings itself. And the next week. So I'll come back to GameStop for the end of next week. And since it's always a lot of time, I'm kind of surprised to see AMC underperforming. Makes it less likely that this is a pure the Reddit meme stock kind of trade where AMC is lagging and just trading maybe a little bit more independently. But that could be something to watch here. If GameStop continues, we may start to see a little bit more bullish behavior in AMC, as we now have pushed above basically every moving average, just pushed above the 100-day moving average, getting above the $5 range. I mean, there could be some serious resistance between 5 and 5.5. Their earnings are already done. It didn't kill this company. They seem okay. We got some decent movies good out right now. Gladiator 2 did well. We had Wicked. We'll see if maybe those things can get people back in the theaters and help AMC recover a little bit more. All right, let's go through the aggressive power trader names. Dropbox. If it stays down here today, it's probably a pass for me. I wait for the bull flag. If it can recover back into yesterday's range, it doesn't look bad for a few days, for maybe a week-long hold. It tested the highs, and right now it seems like we're getting more aggressive profit taking, and they're selling near the highs. So until I start to see some accumulation again and that continued momentum to the upside, I'm not loving that. It looks like it's going to have some serious resistance at 200. Good open interest at 200. Maybe a 195, 200 call spread for December is not terrible. There's no earnings to worry about from that perspective. If we do continue to see transport type stocks and shipping and the economy strong, it appears like this one could do the push to 200 here. We're setting up the chart for a push to 200. So, kind of a tight call spread, 40% of the max value. If I pay $2 for that 195, 200, that one doesn't look too bad to me. Triple L. And then their next real resistance point is going to be 140. So if we get a little bit higher, that starts looking for 140. That doesn't look terrible by any means. Where's our open interest here? Yeah, 140. So the December 140 line has big open interest. Seems pretty clear it's been a seller. And the reason I say that is even though the markets are a little bit wide here outside of that big strike, you can see that implied volatility looks a little bit low on the 140 strike. So most likely what we've got are people either long the 130, 140 call spread, maybe some 135, 140 call spreads. Here's in triple M. And this could be a magnet for us over the next 3 weeks. So that's something to potentially play off of. We may push a little bit through 140. But I wouldn't expect a rally to like 150 or anything like that. If the guy, let's say a person's long the 130, 140 call spread, for example, they would look to potentially start to take some profits as we get towards 140. As market makers buy back the call spread, they buy a call spread that leaves them long delta. They sell stock to offset the delta. That creates more resistance. And if the market is generally long this call, so if they're short this call spread already, as we start to rally, they may be looking to hedge some of the 140 short gamma, and then they switch to being long gamma at the 140 area. It means that their delta is actually getting longer as we go higher instead of shorter as we go higher. So from 130 to 135, the delta is getting shorter for the market. And then as we get through the 140 level and they get long gamma, then they start getting long delta into a rally. So that could be a good natural net, targeting 140, maybe 142. Yeah, we'll pull up our cap for you, William. Here, let's see what we got. Red Cat Holdings. We're going up the elevator. Stopped a little bit at the 9th floor. Now looks like we're pushing back higher. So in terms of having some profit taking, pull back today, opened right in the middle of the range, now pushing above yesterday's high. If I wanted to be real tight with it, I could use yesterday's high as a stop from a long positioning. And then just, it may be a bit choppy since we're so close. But getting in now on the long side, it looks like it could be setting up for a spike, especially if there's lack of liquidity for the holidays. Let me get this down to a 5-day chart. Looking for some of the volume here. So a little bit of volume on the open and then drift higher. A little bit of volume in the open and then drift higher. There's very limited volume of interest on the open yesterday. There was a little bit of selling. With the volume decent here on the open on the buying, I'm kind of thinking more like Friday the 22nd type behavior. Maybe we drift higher up towards the previous highs here. And then if we can push through the high from Monday, that could set up a further spike. So I like this on a more of a day trading stock philosophy of trading it for the spike, given the behavior today. The one we were looking at yesterday on the close, Toyo, that's showing that weakness that was a bit concerning. We got back below. We had some volume yesterday. Let me see if I can pull this up better. So we had some decent volume here in this bar, and the low is 472 actually for the 15-minute. But I think if I get down to the 1 minute, then it's hard to see because I can only do either 1 day or 5. The 477 level looked like a decent level to be entering. I think it was 477 entering on the short side, and this looks like it just wants to start to fill back down a little bit towards the 3.5 range. If we get back above yesterday's low, that would be switching back to either neutral or maybe slightly long, like a light position long or a light position short, depending upon your goals. With the open today, would have been stopping out of a long position and potentially adding a short position. And I think right now, short looks like it's taking control, pushed down towards 3.5. And if we get above yesterday's low, then that would start to negate that. And maybe there are still some buyers here in this morning. It was a 1-day event, move on. Back above yesterday's low, it starts to become a less interesting trade. Above today's open price, starts to get back to the long side and start to form more like what we're seeing in RCAP. I'll look at that again. Yeah, kind of holding here in that 960 range. Good to see that that buyer return only a day after the real profit taking. So that looks like there could be something here. And I just want to make sure that we stay above 945. Ultimately, else there's some volume on the upside. Yeah, maybe a little bit of the issue being the range where that volume was on the open. So if I get this down to a 1 minute or a 5 minute, maybe I can still see this okay. The volume was really in this bar where the high was 9.25. So that might be the level to be particularly aware of. Yesterday's high and 9.25 is kind of some short-term levels that I don't want to see breached for the bull case. And if we start getting below them, then back to the sidelines for a little bit and looking for that next push higher, or getting below today's low to start to say that this is going to drift back down towards 6. All right. I have one earning I want to bring up, and I'm just going to talk more about the ranges. Like the technicals aren't going to be completely lined up today because we're going to have 2 days of, 2 full days, and aware of kind of the levels that I'm looking at and realized about 9%. So call it $20. All right. So if the earnings were this afternoon and we were trading around this level, I'd basically be looking at 185, which lines up, and then the upside to a new high. Where I think this actually would set up very nicely for an earnings trade is if we end up settling down around 200 and change, just about $200 on Monday, because 220 puts us just barely above the high, and 200 puts us right here at the lows of November. So I love this trade if we're trading around $200 on Monday. If we're not trading around $200 on Monday, it may be a little bit harder for the double fly, but I'd love to see this drift back down a little bit and set up for an interesting trade targeting 180 and 220 on Monday. For now, I'm just going to have to wait and see where we end up settling in on Monday, but I wanted to give you guys a heads up ahead of time. 18-ish to $20 is kind of that target move. or one standard deviation for the expected market behavior of the options market. And so that's what I'm really looking for this current pre-earnings movement. All right. So, nothing yet, but that's where I'm watching that. I should touch on the name I added yesterday, BK. So this made it on the aggressive power trade, and it looked really nice yesterday. It also worked really well with some of the weekly power trade stuff that I've been looking at. Up another 63 cents today, following along on watch. And I ended up in the D80 calls yesterday for $2.50. So I picked up 40 cents so far. I won't be on Friday is when I'm going to be looking to take my profits on this trade. So very short-term trade. I was really looking ideally to make, $1.50 in the stock and thus about $1 in the options. So we're about halfway there already. We'll see if we just can continue to get that positive drift for the rest of the trading today and on Friday as well. But if it works out the way that I'm envisioning, getting 40% with, 2 trading day holding period or a 1.5 trading day holding period is not a bad overall return, and it'll fit nicely with the combination of artificial intelligence based signals and some of the technicals that we're seeing, and that continued buying in financials. Morgan Stanley bouncing back a little bit today, adding on Tuesday, and then just done by Friday. Even though Friday was the weekday, Friday was a slightly weekday. Monday was a bigger pullback. Tuesday, another big pullback. So you can see why that actually did line up perfectly with the Friday exit. And then we get the pullback, and Morgan Stanley, so reinitiating on the long side here kind of makes some sense to me, but ultimately knowing that we are pressing against resistance versus stocks like JP Morgan pushing through resistance, Wells Fargo with the lower 10-year yield and lower mortgage rates seems to be another favorite right now. So if you're looking for names that seem to be, kind of leading the pack on the financials, BKs all look really good. Morgan Stanley may have a little catch up, but it does still look good. And that's the benefit, I think, of being in a strong sector of XLF. All right, let's see what else we got now. UUP, the dollar getting hit a bit today. There we go. So testing some of the support levels from last week and a half ago. That ultimately is normally going to be bullish for gold. I am looking at potential long position now in gold. I mentioned this before. I was adding the 52-247 put spread. It was one of these days in here after we had the initial fallback. Ultimately collapsed down lower. It's not too big of a move. We had too big of a bounce back. But now with the dollar starting to break down, I do think that gold and silver could potentially be interesting. Silver lagging here with China up. That doesn't align with what I would normally expect here down. Let me see something here. DBB, that's the base metals ETF. Base metals up. Silver may actually be one of the more interesting sides on this. I mean, it's testing some support here, but it should be doing better given what gold is doing and with China bouncing back. I don't like this for like a $29.50 to $30 price target. It might be one for me to look at this afternoon, like a 28.30 call spread. About just under 60 cents. That could be an interesting way to play NSLV recovery from the laggard standing that it's got with both, precious metals, base metals, China. Everything here seems to be pointing towards correlation should be giving silver some buying here, and I'm not seeing it yet. So it might just be on a one-day lag from the rest of the market. But if I can identify it and get in before it catches up, great. And if everything else starts to pull back, then there is still some decent support down to about 26.70. It's still a loss, but it just would mean something that I walk away from if we start pushing down below, really like the 27.40, 27.35 range. So I've got pretty defined risk, only 15 or 20 cents, call it 20, 25 cents a downside with potential for $2 plus upside. It doesn't look too bad. Kind of like that one. Let me take a look at some of those earnings moves we had from yesterday. So Dell, week, down 11%. The market was looking for about 8%. Average move was around 8%, but we've had a big range of moves here from 1% to 30%. Kind of pushed down into this consolidation area. It looks like it's bouncing back a little today, but that one wasn't a WD. Looked like it could target down to the 335 range. Started off less weak than that, but seems to be driving down towards it. So that's now $1.82.5-ish. That's about a break even. The call fly put fly combo was about 270 yesterday. So if that continues downside, that turns the double fly into a profit. But for now, it's about a break even. Workday, that had a good size move relative. So the normal in Workday has been about 10%. We were pricing it in at 10%. Actually kind of settling in here. It had a bigger move this morning, but bounced back $10. So came back up about 4%. It had been one of the larger moves. The upside was actually part of the problem for the double fly for me on this because I didn't see a natural resistance point. But the market alleviated that by going to the downside where all the support is. ADSK had some of the same concerns. It looked like 300 would be a decent. Looks like 300 is a decent target zone for it, but that was a big move to get to 300 relative to the norm, and we just ended up achieving exactly what the market was pricing in. So no huge edge for the options traders there. Everybody kind of ends up equal. HPQ definitely moved more than expected here. Broke through all sorts of support levels. Pretty nasty move. Honestly, I thought the market, and I said this yesterday, I thought the market was pricing in too much movement, and then we moved even more than the market was pricing in. So this is one of those ones where we had a 2 standard deviation type move. We're down 10.5% now. They were pricing in about 8%, and turned out they were less optimistic on the magnitude of the move than they should have been. That is dragging down HPE, and I wanted to just touch on this quickly. HPE getting hit here. But if I looked at some of the past earnings, as I did, you look at HPE, their next earnings is December 5th, next week. In the September 4th earnings, HPE was down about 6%, and HPQ was up 2%. So it's not always correlated here. When we had the big up move in May of 17% for HPQ and HPE as well, following on that. So, sometimes it goes hand in hand and sometimes it goes the opposite way. And I'm wondering if this is generating an opportunity for the bull, where if HPE and HPQ can diverge from each other here, like we did 3 months ago, this may be a better setup for the bull side, and about $1.50. So that would be right in line with the previous high. And to look at next week, if we're still trading in this area, I'll be looking at a December 6th. I'll just go the bull side only, like a 22 profit window of effectively, right now that butterfly is a dime. So my profit window is between 22.10 and 23.90. That seems like a pretty reasonable target zone. It doesn't stay correlated to HPQ on their earnings announcement. So that's kind of a preview on that one, but I do like the idea here on HPE of looking for a bullish fly for earnings next week. already getting ready for it, even though I won't execute until probably at the very earliest Tuesday, but more likely Wednesday or even Thursday, since it's an aftermarket on Thursday trade. All right. Seeing a little bit of follow through weakness here in tech. Is IWM getting dragged down a little bit here now? Yeah, so IWM pulling back a little bit with tech pulling down the market. Semiconductors continuing their weakness. This is getting into that concerning area for semis. Is AMD. AMD is the one that I like to look out for, the bear case. If semis continue to drift lower, AMD just hasn't had much bounce back. They had poor earnings and just a bunch of bear flags along the way. It's a stair stepping down setup right now. But if semiconductors go into liquidation mode, I could see AMD down towards 122. And if I go out to like mid-December options, bucks, those would go towards say 12 or 13 and get even more leverage if I want to trade on the bigger move by getting into the 130 puts for 280. I don't want to go down to like 125s. Those are just low probability with actually not the best leverage. With implied volatility near lows, though, I'd rather just be long a put now and then either rotate it or take my profits in that scenario, because that should happen if we do start to liquidate AMD. NVIDIA, of course. So NVIDIA is breaching the October 31st low, is right in line right now. And that starts setting up a move down as well. Similar implied volatility level to AMD, generally lower than it normally would be. But we'll see very similar kind of leverage for a move down there. $4.50 for an at the money put, basically the same pricing as AMD. I tend to think that AMD treading its new or near the lows is a higher probability bet on the bear side than NVIDIA. And if NVIDIA can start to bounce back, then I'm just targeting a 150 if semiconductors start to get bullish flow. PLTR, yeah. So PLTR just never ever goes down anymore. It turns out, we get little profit taking for a day, maybe two, and then push to new highs again. So this just right now is on this nice bull train run. Clearly, the market's very long this name. That would be my biggest concern, is if we start to breach any support levels. But this is almost trading like Bitcoin right now, where we could have some violent retest of support now. AI names tend to be just generally very strong. C3 AI had their partnership with Microsoft spiked, consolidated, spiked again, consolidating. So maybe on Friday, this could set up a buy signal for me if we get above today's high. So I'd love for AI to stay in this range and then look to add it maybe on Friday or Monday for 40 plus. UiPath was the one that I'd done before. It's just kind of hanging here around 14 bucks. Very similar setup to AI, but for now, this is still looking weak. And I've seen this over and over now with it. I was looking for it to break out, but every time it breaks out, it seems to find a seller to push it down towards 13 and then try it again. Maybe eventually that breakout will actually take grip and it'll run. But with earnings next week, this is probably one to avoid. Let the earnings happen and hope the earnings aren't so good that it pushes to 18. I'd love to see like slightly bullish earnings where we get towards like 15, and then I can trade off of that, follow through the continuation trade afterwards. But it's normally, 15% mover, so call it a buck. Sorry, about $2. $2 would put us at 16 if we get 15%. Just looking for some new technical formations over the course of the week following earnings. Ooh, Micron getting weak again here. So I like Micron on the long side because of the bullish earnings, but now we're approaching the next earnings. So this one's no longer one that I'm looking to add anything for now. After this next earnings, if we have another bullish earnings, I think this will start the setup for people looking to push towards 150. If we end up with a bearish earnings, then this starts to follow the AMD model of looking to sell it when semiconductor allocation is going out and people are just only buying the best, which seems to be NVIDIA. Intel may be a little bit easier to buy into with okay earnings here. I think there's still some bitter taste in the mouth of the bulls after this August 1st earnings. Source of money allocation. Seems like the semiconductors are just not necessarily the place to play, other than maybe that bearish case for AMD. And I say that now, and on Monday we're going to have huge semiconductor buying, and then I'll have to rechange my philosophy, but that's part of the flexibility of options trading, right? Yeah, so Intel just got $1 billion from the government. Thanks for the reminder on that. And it should be okay, but with semiconductor general hate right now, and the money flow coming out of semiconductors, nobody seems to be looking to buy Intel or anything. The only semiconductor they seem to want to buy right now is SMCI, and has really closed up a lot of the gap from that. The most recent bad news on October 29th, 30th, we've really recovered nicely in the stock. And to me, it seems like it's got some definite tail risk to the downside. If anything negative comes out of that probe, any new news comes out, sure, if it gets resolved, this can spike back up into the 60 range like that. And if it doesn't, it can be down in one that I until the implied volatility is back down to a low level where it's not. I don't want to play with it, but it is interesting to me to see this kind of formation of downside then recovery. I don't know when their next actual earnings are going to be announced. They show here the 29th after market, which doubt's going to happen Friday after the close. I'd have to look into it a little more to see if they actually do have some sort of real earnings date projection, because if they actually announce earnings, that might be enough to give a little confidence that they've got their accounting issues under control. All right, we're bumping up close to 10:30 here. If there's any other stocks you guys were looking at this morning, please definitely let me know. Take a quick look here before we bounce off, but overall, it looks like the financials still holding up okay. Small caps holding up, not red yet. If tech continues lower and gets down 0.25%, that may start to drag down everything. So just kind of being aware of that for today. But for now, we're kind of hanging out okay with tech selling, small cap light buying now, and risk reduction sitting right near the highs. Low. Get low. Yeah, it's at an inflection point for sure. 275. We're looking right at this high from 2 weeks ago, sitting there right now. I think if we get a new high on the day, I'd start targeting 285. So it's $10, but that could be an interesting $10 move. If we start to drift down, the retest of 260 makes some sense. So we're just kind of downside, $10 of upside, and then we make that next decision after that. For here, I don't see a trade on the downside very easily. My entry point would maybe be on Friday if we trade lower than the lows today. For me, it would be above today's high, starts to set up that bull case. What's HD doing right now for today? So made the new high. We talked about this on earnings where it had bullish earnings and pulled back anyway, consolidated and now getting bullish again. So maybe if HD just continues to get the money flow, that'll drag low up a little more. So I maybe watch that a little bit as a signal for a potential entry. If they're buying HD, that could follow through to lows. But right now, I'd say low is a inflection point trade for the next few days. Could be interesting if we get above today's high. That sets up for a $10 rally, and if it doesn't, then maybe no trade until we start to see that bearish formation to retest the lows. Pull up FDX. Still marching towards 310, so no real change there. Nice setup today though, with the trading above yesterday's low, yesterday's high. So we had the kind of spike, a little profit taking, and now getting a little more follow through. 310 was my target here. It still looks like the march forward towards 310. At which point Then we turn focus to earnings here in 2.5, 3 weeks. Ooh, Capri puts. So we're trading some in the money puts in Capri. So this is starting to set up for maybe something interesting. So Capri was going to be taken over by TPR Tapestry. And Tapestry, or the merger was blocked. Capri collapsed. Tapestry spiked. Tapestry's had follow through. Capri is now being viewed as a company that can succeed on its own without the acquisition. This could start to set up some interesting gap filling, maybe back into the low 30s. Implied volatility here down around 43%. Realized volatility in the 10 days is 50%, 20 days is 60%, and that's post the gap. So there's some leverage there into like the December 25 calls. There's basically a very limited probability being priced in that we can get up above 30, with these options being, 12 cents or 15-ish cents for both the 32Fs and the 35s. That's starting to set up a potentially interesting chart formation here. What was the high here? 23.25. Capri here for potential interesting jump back up now that the liquidation for the the M&A crowd is done. All right, we are at 10:30, so I got to bounce here, but I appreciate you guys. Have a wonderful Thanksgiving, and I will see you all next week. I hope you all have a great long weekend. Try not to overstress about trading on illiquid days if you can, but if you get some opportunity, this could be a good time to jump on it. So best of luck to everybody, and we'll talk next week.